Most investors believe they need to buy close to home or in big city to make money in property. But sometimes what feels familiar isn't what delivers the best result. Let me share a story of how one client almost made that mistake and how we helped them turn it into a 150,000 win. This client was a high income earner based in Sydney. They came to us with one goal. I want to buy an investment property in Sydney, somewhere I can drive past and see it. The problem was they were emotionally attached to the idea of investing close to home, but Sydney's property prices and rental yields didn't stack up at the time. If they had gone ahead, they would have struggled with cash flow and limited growth. Here's what we did. We started by educating them on how market cycles work and why where you live is not always where you should invest. We analyzed multiple markets across Australia using our data tools, reviewing growth trends, rental demand, infrastructure pipelines, and affordability. Brisbane stood out with clear indicators of strong short-term growth, lower entry price, and better rental yield. We presented a side-by-side comparison showing how a 700,000 property in Brisbane would outperform a 1.2 million Sydney apartments in both cash flow and capital growth. The results? The client trusted the process and purchased a freestanding house in Brisbane for 580,000. Within 18 months, the property value increased by over 150,000. Rental income of 630 per week, much better yield than what they would have received in Sydney. Holding costs significantly lower, putting less pressure on their cash flow. If you're stuck thinking the only place to invest is where you live, this story is your reminder that best opportunities are often elsewhere.